Hey everyone, and welcome back to the channel. Have you noticed the price of gold lately? It seems to be on a non-stop journey to the moon. You might be wondering, what's going on? Why is this shiny metal suddenly everyone's favorite investment? Well, today we're pulling back the curtain to reveal the real reasons behind gold's incredible price surge. It's not just a random spike. There's a powerful combination of global forces at play. So grab a coffee, get comfortable, and let's dive into the fascinating world of gold. First up, let's talk about a word we're all too familiar with: inflation. When the prices of everyday things like groceries and gas start climbing, the money in your savings account buys less and less. It's like your cash is losing its power. In times like these, people have historically turned to gold. Think of it as a financial shield. Gold has a reputation for holding its value over the long term, so when people see their currency weakening, they buy gold to protect their wealth from being eroded by inflation. It's a classic move to preserve purchasing power. Next, we need to look at the US dollar. The dollar is the world's primary reserve currency, and gold is priced in dollars. This creates an interesting seesaw effect. When the value of the US dollar goes down compared to other currencies, something fascinating happens. For investors in Europe, Japan, or anywhere else, gold essentially goes on sale. Their local currency can suddenly buy more dollars, and therefore more gold. This discount fuels a surge in demand from international buyers, pushing the price of gold higher. So a weaker dollar often means a stronger gold price. Another huge factor is global uncertainty. Let's be honest, the world can feel like a pretty unstable place sometimes. Whether it's geopolitical tensions, trade disputes, or major economic slowdowns, uncertainty makes investors nervous. When traditional investments like stocks feel risky, people seek refuge in assets they can trust. Gold has been considered a safe haven for thousands of years. It's a tangible, physical asset that isn't tied to the success or failure of any single government or corporation. During times of crisis, there's a flight to safety, and gold is often the #1 destination. Now, let's talk about interest rates. When central banks keep interest rates low, it changes the entire investment landscape. If you put your money in a high-yield savings account and the interest rate is super low, maybe even lower than inflation, you're actually losing money over time. This makes holding cash or bonds less attractive. So what do investors do? They look for alternatives that might offer better returns. Gold, which doesn't pay any interest, suddenly becomes a much more appealing option because you're not missing out on high interest payments elsewhere. Low rates push people out of savings and into assets like gold. We also can't ignore the basic principle of supply and demand. Gold is rare. It's not something we can just print more of like money. Extracting gold from the earth is an expensive, difficult, and time-consuming process. The global supply of newly mined gold only increases by a small percentage each year. Meanwhile, the demand keeps growing. When you have a limited supply of something that more and more people want, its price is naturally going to go up. It's a fundamental economic reality that strongly supports the value of gold over time. And that brings us to where all this demand is coming from. It's not just individual investors. Central banks around the world are some of the biggest buyers. They hold gold in their reserves to diversify their assets and protect against currency fluctuations. In recent years, we've seen a massive trend of central banks, especially in emerging economies, increasing their gold holdings. On top of that, there's a huge global demand for gold in jewelry, particularly in markets like India and China, as well as for industrial uses in electronics. This multifaceted demand from different sectors creates a solid floor for gold prices. So, to wrap it all up, gold's status as the ultimate safe haven asset is what ties all these factors together. When trust in currencies falters, when stock markets are volatile, and when the future looks uncertain, gold shines. It's a store of value that has weathered countless economic storms throughout history. It acts as portfolio insurance, maintaining its worth when other assets are falling. The combination of inflation fears, a fluctuating dollar, global instability, low interest rates, and strong, steady demand creates the perfect storm for rising gold prices. It's not just one thing, it's everything working together. Thank you so much for joining me today to uncover the truth behind gold's boom. I hope this gave you a clearer picture of the forces shaping our financial world. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe and hit that notification bell so you won't miss our next deep dive. We'll see you in the next video.